What's going on, YouTube? Welcome back to Stocks by the Numbers. As per request, wanted to dive into a company that just reported earnings, and as we see here, making a big move on the day. Let's get into it. Name of the company in question, Twilio Inc, ticker symbol TWLO, listed here on the New York Stock Exchange. Tech company, very similar to Discord. I'm sure they're doing some other things and have some other segments. You guys can, read a little synopsis on the company yourself, because I just wanted to dive in and check the charts and the numbers real quick. So as we see here, TWLO on the New York Stock Exchange, this was a brand name stock that apparently went to the moon and has since come back down. And you want to know when it went to the moon? Well, it was the same time that every one of these younger tech stocks went to the moon. You guessed it, right after stimulus money came in. And as we see here, a stock that was at 130, 140, that dropped about 50% to sub 70, for some reason rallied to almost 400. It did rally, excuse me. There you go. Look at that high. $457 a share, right? It is just laughable and hilarious. It really is. That's the only way to describe it, is laughable. Watching these younger tech companies, the few names that, these younger, newer investors and traders knew, and it's amazing how it was basically the tech sector as well, unless it was some meme stock that was on Wall Street Bets. But overall, it was tech companies, it was battery companies, EV companies that weren't doing any business, rallied freaking 2,000% during the same time frame. It is just hilarious. And then what you see here is, well, you have a company that's doing a couple of billion in revenue, and now they have a market cap of like $90 billion. So yeah, everyone on Wall Street laughs their asses off and says, this is a guarantee. I'm shorting a $60 stock at $450. Of course I'm going to win. And that's what they do. So, hey, listen, I'm not bashing the company. The revenues have been growing phenomenally on this stock. We'll look at them in a minute, but I just want to say, if you got pulled in here at like $200-300 a share and you're down big, I really, really hate to be rude and abrasive and ruffle your feathers here, but at the end of the day, that is on you. Shame on you. Again, like I always say, we have companies come out, even IPO here. This thing IPO'd, 24, so it's 50% lower, so that's about a $4.5 billion market cap. And when they came out here for 16, I think they were just doing like a couple of $100 million in revenue. So that's why to pump a stock up like that to the moon and potentially dive in and think it's worth more is just silly, in my opinion. That's why I always say, look for good companies with decent revenues that get beaten up and buy them at discounts. There is no way you could have pulled me into this stock up at $200, $300, $400 a share. No way. And then as we see here, immediately comes crashing all the way back down to earth, right? And you know how I know it's not worth $300 or $400 a share is because it hit 457 and then basically cratered and beelined all the way back down to $40 a share. So if it deserves to rally, 1,000%, it wouldn't have dropped 90% of that value back. However, again, that's a little story for a different day, but long term, as we see here, I wanted to pull up an old chart here, and you can see this is basically the bottom trend line that I drew across here, these bottom candles indicating the potential low here. As we see, if it does immediately break out of this triangle after hitting the apex and drops down to this trend line, you're going to see $32 a share, which is about a 25% drop, which I know seems pretty extreme. However, that would be about $2 billion drop and change off the market cap, which would bring us down to about $6.8 billion, which, as we see here last year, $3.8 billion, and that would be a little less than 2 times yearly revenue, which again might seem like a low multiple. However, the company is losing $7.50 a share, despite coming in above estimates on the EPS side for the last 4 quarters in a row. This is what I mean. This is kind of like a mixed bag. So not necessarily coming at you here with high conviction on a potential buy or a potential sell, because long term, based on this revenue growth, absolutely phenomenal. Absolutely phenomenal. So if you want to potentially start piecing your way in, as this thing pulls back to the low 40s, that's understandable. If you're already involved in the stock, let's just say like up here at this fib of like, like $60, $68 or something like that, don't beat yourself up, right? Everyone you speak to has taken losses and encountered losses. That's why the more someone will like boast or brag or they'll try to like belittle me in my own comment section or some nonsense like that, I just laugh and laugh, because first of all, if someone speaks negatively about any review or any analysis you do, it simply means that they're betting the opposite direction, right? We've all figured this out. It's really that simple. Guy comes out, oh, you have no idea what you're talking about. You should, go do landscaping. Don't talk about stocks. It's like, wow, tell me you own the stock without telling me you own the stock. You know what I'm saying? But anyway, basically, long story short here again, this is the potential low. Revenue has been growing. What was I saying? Yeah, if you're in at 60, 68, don't beat yourself up. Everyone takes losses. And again, I know this hurts in the short term. If you have the liquidity, might be a decent idea to add to the position here as it approaches, these low 40s here on the sell-off. However, long-term overall, the growth cannot be denied, right? As someone on the outside looking in that doesn't have a position in Twilio, the one red flag is the fact that no matter how much money they make, apparently they lose 30% of it. However, the revenue growth cannot be denied, going from 650 million here to north of $1 billion, almost $2 billion, almost $3 billion, almost $4 billion, right? So this growth is astronomical. So you have to give credit where credit's due. Should it have gone up to 450? Absolutely not. Should it really crater down to like 30? Not really, in my opinion. Not really. Because again, what that's going to do is that's going to bring us down, what did we say, like a market cap of like 6.6 billion. But if we check the financials here, if we come over here and we check out our statistics, obviously some of them are good, some of them are bad, but I wanted to show you, look at the enterprise value. Again, the enterprise value is basically what another company would value the stock at currently. And as we see here, right now market cap is 8.9 billion, so a little bit higher than technically what they may be worth on paper. Second of all, if it drops down roughly that 20-25% sell-off I was talking about, and the market cap becomes about 6.6, 6.7 billion, as we see here, it may technically be viewed as undervalued, and that will now potentially be the bottom that it bounces off of, right? But certain metrics here are negative, some are kind of heading in the right direction. As we see here, the return on assets, equity, and invested capital have all pulled back year over year for about the last 4 years in a row. Gross margin percentage was well above 50%, has since pulled back to low 46s and slightly climbed above 46.5. Operating margin has increased significantly, was over minus 30%, is now sitting here at about minus 11.75%. The EBITDA, once again, earnings before interest, taxes, depreciation, and amortization. The EBITDA margin was in the negative low teens and then jumped to as low as about minus 21% and has since climbed, as we see here, minus 17%, now sitting at less than minus 4%. So the company is doing a few things right. They did also mention they may potentially lay off about 17% of their workforce to try to increase these profitability numbers, but only time will tell. I still laugh, too, because, I love how these politicians will come out and they'll use stats like, oh, there's more jobs than people unemployed and all this nonsense. And then every day you wake up, what do you see? Oh, Meta's laying off thousands of people. Amazon's laying off people. McDonald's is trying to go people-less. They're trying to be people-less. They're building McDonald's run by machines, right? Which means that technically, like 30-40% of the cost you're paying for a McDouble shouldn't even be factored into the price. This is what I'm talking about. This is what aggravates me with certain companies. Just like when they started making those plant-based burgers, right? It's like, well, you're no longer taking care of the cattle and buying feed. You don't have to own acres of land, and right? You're eliminating all of that, and you're replacing it with a burger you made from a plant. So shouldn't this burger be like $1 or $2 instead of 20 cents less than your flagship sandwich. So that's why, you know what I mean? I think very differently than a lot of other people around me. And I know some of you watching the video might jump on me in the comment section for saying things like this, but this is what I mean. This is when I talk about taking a step back and using that simple logic and common sense. That's all I'm talking about, right? But I'm kind of going off on a tangent here. Let's get back into it. The one thing I will say is they are holding a lot of assets. If we come over here and we check out the company, again, first of all, we're seeing that really nice growth in revenue. You're seeing a lot of different sectors coming in, bringing in good revenue for the company. And, of course, they earn revenue here in the U.S., domestically, and international as well. Look at that, north of 30% of their revenue comes from overseas. I mean, that's just fantastic. And we have excellent estimates here coming in. As we see, the company has beaten analyst estimates on the revenue side for the last 4 years in a row. So that's why I'm saying, are some of the numbers crappy? And, can Wall Street pull a fast one and bring it lower than we think it should? If we think it should drop to 42, can they drop it to that trend line I showed of about 32? Well, yes, of course. We've seen this. Anything can happen. Right? Anything can happen. And like I always say, I know it sucks in the short term, but if the company really begins to look attractive in the numbers at 42, 41, don't be afraid to trust your gut and be confident. Because again, this long-term growth is probably going to outweigh the short-term volatility that you may experience in the next 1 to 2 quarters here of owning Twilio. And of course, like I always say, if you do have consistent liquidity every week or every month, however often you can add to your portfolio, like I always say, if we like it at 42, we're going to love it at 32. So, it's fine. If you have the money coming in, just keep adding to the position, if you really see it hitting that undervalued mark. However, I will say here, look at the debt here. Was about $430 million, jumps up to $600 million, and now basically doubled here. We're up to $1.3 billion, and last year at $1.24 billion. So slightly pulled back on the debt. However, as we see here, cash flow goes negative here. They have been struggling with that profitability. But look at the assets here. Look at these assets. Company's holding about $12.5 billion in long and short-term assets and only about $2 billion in liabilities. So again, I know some of the profitability numbers are struggling. Basically, the stock took a big hit today because they came out and said that this earnings, looking like the end of July, is going to be potentially slightly short of estimates. So as you see here, Wall Street estimating $1.01 billion for this quarter here, period ending June of 2023. And I think the company came out and said, yeah, we might post $990 million. So everyone and their brother all of a sudden, this company sucks, I'm lowering my price target, right? It is hilarious how this shit really works. These are the only two industries here. We have financial stock analysts and meteorologists, right? If you really think about it. The meteorologist can come on and say we're going to get a snowstorm, and then all day it's 50 and sunny, right? He could be completely wrong, but he still gets paid. He still has a job the next day. Everyone knows his name and watches him religiously. Channel 5 new, Channel 9 new, whatever the heck you watch, right? It is hilarious. Analyst, same thing. We have price targets being lowered on percentage decreases. It is just laughable. If I was this wrong, I would take full responsibility. I might potentially change my career if I was this wrong, because I shouldn't be an analyst at one of these companies, right? But again, in the finance industry, as long as you know the right people, it doesn't matter. So basically, 15% decrease, again, largest percent decrease since November of 22, based on these potential drops in revenue 3 months from now, right? So it hasn't happened yet. They're just saying it could happen. Wells Fargo adjusts Twilio's price target to 60 from 70. All right, not that big of a drop, right? Look at this. Canaccord Genuity adjusts Twilio's price target to 75 from 97. Oh, yeah, sorry, guys. I was just 25% off. Sorry about that. Oh, did I say 85? I meant 65. I'm over at UBS. Yeah, that's who I'm trusting. Look at this. Bernstein to 58 from 77. I was about 30% off. Sorry about that. B of A, smaller percentage decrease there. 55 from 65. We've seen worse, obviously. Look at this. Piper Sandler. Oh, it's going to 56, not 83. Did I say 83? I meant 53. Needham adjust price target on Twilio to 65 from 88. Man, I wish I could be this wrong and still get paid and still get my year-end bonus, man. These guys have it made in the shade. They don't even understand. Oppenheimer, 75 from 85. Look at RBC. 55 from 75. Oh, man. Oh, man, I am in the wrong business. I'll tell you what. Even Morgan Stanley here, 65 from 82. So here's what happened, right? If the company didn't say, if the company didn't say that these numbers would be light, everybody would probably maintain like a $90 price target on the stock, right? All of a sudden, it's worth double what the son of a bitch is trading right now, right? Think about that. 100% higher, basically, across the board than where it is right now. And now all of a sudden, oh, you're going to miss by 15, 20 million? All right, yeah, you're not going to 90 anymore. You're going to 50. Oh, all right, tell me how you really feel, right? But going here long-term back, this is about a year ago here, as we see here, May of 22, and I just wanted to show you guys, see how it flattened out here and kind of found that resistance? I drew that trend line down across, and as you can see, touched the top there in February of 23, and then the bottom, the new lows that it hit after this earnings report back before the end of the year, November 22, you can see I drew that bottom trend line to where it hit right now. And basically that is forming, again, another like long-term symmetrical triangle, which technically doesn't tell us if we are bullish or if we are bearish. We're going to have to wait and see. However, incidentally, that apex is kind of right around the next quarter's earnings. So as of right now, not really definitive in my opinion. Going to have to keep an eye on it. Today, though, I will say, I drew out this symmetrical triangle because it's basically where the stock has been trading inside of this range. And then as of late here, we can see about an hour ago, not only did it break up and has stayed above this top trend line here out of this triangle, but it is, more importantly, steadily staying above this 20-day simple moving average. So they may have overreacted here and they may climb it up. However, again, I actually have seen this before, and if you're asking me what I would do in this situation, the answer would be wait. I would wait, because you know that even if they already took it to the lowest of the lows, they're probably going to at least retest that 45 level and bring it back down to that low, and maybe they can make that form the double bottom, which would be bullish, and then they can bounce it back up higher. However, again, the 52-week range was 41. And, if the company's saying it might get rough before it gets better, they may potentially bring it down and test it to those low 40s here. And if we pull up an alt chart here, for the most part, you can see this was basically a bottom trend line here across the support levels going all the way back from 2017. And obviously, the stock hasn't been that low as of late. However, if it does potentially break out of this symmetrical triangle, end of July, early August, if it does potentially break down, they could bring it down 25% to about 32, which again would bring the market cap down to about 6.6 billion. And if we check the financials quickly, enterprise value 7.4 billion. Wait, 7.4. Yeah. But again, it has some positives, it has some negatives. I know you guys might be familiar with the stock. You might like the stock. You saw it at almost 500, so you're excited to try to buy it down here. Just remember, before, excuse me, I'm talking myself out of breath here. Before it flew to the moon on free stimulus money, the stock did not get higher than about 150. So inside of the next year or two, even if it rallies and they do well, that's probably the max where it should go. And again, that's tripling the current value. That would give you about a $27 billion market cap that the company right now does not deserve. So if you tell me 6-12 months from today, hey, remember Twilio? It hasn't moved. It's been flat. Understandable. If you tell me 6 to 12 months from now, hey, remember Twilio? It broke down and hit that bottom trend line. It's down at the low 30s. Understandable. However, if you tell me, oh, I really like Twilio, I think it's going back to 200, no. There are a lot of things I can say here, but at the end, no. It's not supposed to happen. So, you have to look at the numbers. You have to analyze the actual health of the business. Do not just wake up and have it be Wednesday and say, oh, I kind of like this stock, I'm buying it. Like that's what I mean. That is gambling. That is not investing. That is not even trading. You are legit gambling. And if you gamble, you have to be prepared to lose. That's all it comes down to at the end of the day. This is why I always say you have to stay sharp, stay disciplined, stay focused. This is what I mean. I know we all want money quick. We all want action, right? Today might be a big earnings day with like 10, 15 brand name companies reporting after the bell. You want to get involved with something. You want some action. No. You're acting like a gambler. You are not acting like a trader. You are not acting like an investor. Because I guarantee if you had Warren Buffett sitting next to you, or even someone who trades more in the short term, right? Because I know Warren Buffett is more long term. But even if we take a very successful short-term trader, like a self-made millionaire, and you were sitting there saying, oh, earnings were coming out, I'm looking for some action. What do you think about this symbol? What do you think about that symbol? Should I buy calls? Should I buy puts? Honestly, that person would just completely tune you out and not even acknowledge you. Because they have been down that road. They have made that mistake that you are currently in the process of potentially making, and they know, now the last couple of times I did that, I lost my ass. I'm never doing that again. They know these things. So, again, when you trade, in my opinion, if you really know your stuff, you probably have like a 60-70% chance to be correct. If you really do due diligence and leave no stone unturned and find out every single iota of information out there on the stock, you probably have like an 80 to 90% chance of making money slowly but surely in the long-term investing. If you jump in and you're just looking for earnings plays because you want some action on the day, you probably have about an 80% chance to lose your money, which is only a 20% chance success rate, right? That's why I say be smart, stay disciplined, stay focused. You can't lose what you don't put in the middle, right? That's from Rounders. You guys ever see that movie? Good movie back in the day. But you don't lose what you don't put in the middle. So if you don't push that buy button and have that like addiction to where you constantly need action, if you can control yourself, I'm telling you, your portfolio will appreciate faster than it depreciates. However, here on the daily, very quickly, let's look at stock charts. We drew out the Bollinger Bands. We had a big gap down that opens up our top and bottom Bollinger Bands now trumpeting, and we can see here our 50-day and 200-day moving average are 60 plus on the daily, and it just rallied up, and then boom, we had a big crash down here on this announcement. However, is trading towards the top of the range again, so we have to see. If they slowly bring it up to like refill this gap, then that's actually a pretty good sign, because these might be around the lows. But again, if we wake up tomorrow and it just let's just say we just wake up and all of a sudden, like, boom, it's like down here at like 46, and it's like out of this triangle and now trending downward. That's what I'm saying. That's why, in my opinion, I would just keep an eye on it. I really wouldn't be a buyer right now. The RSI has significantly pulled back from about the 50 level down here at sub 33, which is a pretty good indicator. However, again, the company just came out with multiple negative catalysts, and you had 10 analysts come out and lower their price target. We have the MACD about to cross and potentially break downwards. So, again, you might like the company in spirit, but the market doesn't care how you feel. The market is going to take it where it's going to take it. The MACD has completely flattened out. The good news is this bottom Bollinger Band of 45.62, as we see the low here, 45.68. So that's why I'm saying we may be right around the lows here, just a few dollars higher than the low we could potentially go. So I personally, in my opinion, would just watch it and keep an eye on it and just see if I can try to get it for a couple of dollars less, or even if it runs up back to like 50, 51, I wouldn't like feel that FOMO, and I wouldn't have to jump in and ride it to 60, because remember, they came out with negative news and they immediately brought it down to 45. So if that's where they want it, or potentially even lower, that's where they're going to take it. Doesn't matter how much you like the company, how much you researched it, none of that. The RSI, even though it has been pulling back, is still sitting here north of 38.5, still has room to drop. And again, this MACD flattening out with the sell-off may potentially cross and begin to pull back there with the rest of the stock. So again, kind of a mixed bag, but we are breaking out as we speak here going into the end of the day. However, again, the markets have been really ridiculously rallying, in my opinion. The fact that someone could look at a CPI, I think was reported today, of like 4.9, and that's what I mean. Like, did it potentially come in below estimates? Like, yeah, maybe. But it's still bad. These are still bad things. That's why you see the way they're rallying the markets back here today. Chances are they're probably going to be down tomorrow, right? Because midday a few hours ago, the Dow was down over 300 points. And now all of a sudden you're telling me in the last hour or so you're just going to rally it up and bring it back flat or bring it back green. Like, that's what I mean. That's why I say, like, these markets are BS and they're fake and they're being manipulated. Like, this is not what's supposed to happen. But, again, that's just me. That's just my opinion. I may be right. I may be crazy. But it just may be a lunatic you're looking for. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm sorry if this did not really give you a concrete view of where the stock is going to go. But again, I don't know personally where the stock is going to go. If I had an idea, if I saw something, I would tell you. But we mentioned some positives. We mentioned some negatives. At the end of the day, it's your assets. It's your money. Whatever you do with this information is entirely your own prerogative. But moving forward, I understand that markets are rocky and volatile and uncertain. So I want to wish everyone success. I hope everyone makes a couple of dollars. Thanks for stopping by. Catch you in the next vid.